And another strong start, Carl. Happy Tuesday, everyone. 2-1 advancing to declining stocks and all the right stuff advancing. Take a look here. Energy's on fire. Boy, a lot of new highs in the energy group. Oil's near $75, so energy leading. Banks, industrials, semiconductors, the SMH. Even consumer staples are up, but Pepsi's up 3%. It's dragging Coke up along with it, so that sector's up. Not a lot of new highs, but most of them are energy stocks. Slowly but surely, they've been populating. So Marathon, Hess, Devon, Conoco, Anadarko, Petroleum, 52-week high at least here. So they're really starting to creep up and starting to move in here. We have had one heck of a rally. The S&P has moved 3 points in the last 4 days or so. That's big. And we're starting to look technically very positive here. So here's the S&P for the year, that line across. Remember, we're starting to pass the June and March highs that we had before. That's a series, if you look at that, that's a series of higher highs, lower lows. That's technically a very positive indicator. The all-time high, remember, 2872. That was back in the end of January. So ways to go, but that chart, that's a very positive looking chart. The market's pricing in a lot of good news. What I'm worried about is the risk is really to the downside. I mean, the market is really betting that cooler heads are going to prevail on the whole trade and tariff thing. The Fed is in what I call a dovish box, meaning they're raising rates, but only gradually. Inflation's still relatively under control. Momentum is clearly growth over value. Everybody's betting tech is going to just keep going up. That's a big bet right now. And on those other marginal issues, rising commodity costs, rising rates, the higher dollar, everyone seems to think they're going to be manageable. And by the way, we heard that essentially from the Pepsi CFO. Great interview from the guys this morning here with the CFO on commodity costs manageable. And I would note his comment on the dollar. This was in their press release here. There was concerns about the higher dollar, but Pepsi said foreign exchange translation had a 1 percentage point favorable impact on reported net revenue, and that's because the dollar is a little weaker than it was a year ago compared to today. Yes, the dollar's been rallying quarter over quarter, but these companies do the comparison year over year. So remember that. That's going to be a positive impact for some of these. Earnings trends in general, well, pretty good overall. Here's the difference. First quarter and second quarter was about raising earnings estimates on the tax cuts and the buybacks and global growth. Q3 and Q4 is really just about maintaining that. You don't want the numbers to go down. That's what the concerns are here. And if you look at these numbers, these estimates, why would you? Everything is up 20% this year and nothing is changing. So Q1 is up 26%. Take a look at the next one. Q2 is going to be up rather notably, 20%. Q3, 23, and maybe beating Q1. And Q4 is 20%. The key here is don't drop below 20% on the numbers. And most people will say maintaining, not a bad idea here. So we've seen some companies affirming guidance today. The guys mentioned Nordstrom affirming the guidance for the full year. Obviously, that stock is down a bit. They did get a downgrade as well today. So that may be impacting it. PepsiCo had very good numbers overall and affirmed their guidance. So the key for earnings season this year, at least, maintain the forward guidance, and that's going to keep the momentum going. Right now, we're just off the highs for the day. Dow's up 93 points.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.